Friday, June 4th, 2021, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at Gresham's law, and I'll try to explain it as succinctly as possible. It's not hard. I think Gresham's law is also going to be a big part of what's going to happen to the current fiat currency system or the dollar system. And I think Thomas Gresham, who came up with this law of currency or money, probably would never have thought this would happen. The loss of confidence in the currency, hyperinflation. I don't think it's something that happened back when he was alive. Before I start, though, I like to say that in yesterday's video, we got loads of these impersonators. They basically copy my thumbnail. They pose as Monaco 64, and they make loads of comments in the comment section about looking into cryptocurrencies. And then they make a second comment with a WhatsApp number. They've been popping up for over a year. It's very annoying. I did delete them all. It took me half an hour. I reported it to YouTube. So for those of you who are watching for the first time or new viewers to the channel and see those comments, ignore them. You could report them as well to YouTube. It's very annoying, and I'm sorry that that happens. So let's look at Gresham's law. First, look at Thomas Gresham. So Sir Thomas Gresham the Elder was an English merchant and financier who acted on behalf of King Edward VI and Edward's half-sisters, Queen Mary I and Elizabeth I. In 1565, Gresham founded the Royal Exchange in the city of London. So yes, he was a financier. He founded the Royal Exchange, the stock exchange. So he knew what he was talking about. So what I've done to explain Gresham's law, I did a few graphics here on my computer, and I took the Swiss franc. Why did I take the Swiss franc? Well, because the Swiss franc still has the reputation of being a hard currency. A lot of people still think it's the currency to have, but you will see that none of the fiat currencies nowadays, be it the Swiss franc, or some people ask about the Singapore dollar, or none of them are any good. They're all losing value at a rate of knots. Of course, not every day, but over the long term they are. Incrementum AG from Liechtenstein, they do the reports in Gold We Trust. Last year they had a table of how the major fiat currencies performed since 2001, and they lost on average 10% every year versus gold. So that's how they're doing. And Switzerland, of course, the Swiss franc interests me. I did live there a few years. I do have family there, so I'm familiar with Switzerland. So I have one Swiss franc coin from 1964. So here you go, 1964 franc. And I also have one from 1968, and they look very similar, don't they? But if you notice, the 1964 one is clearer and shinier than this one, and also you will see how the weight is different. So what happened? Well, this is a copper nickel one. Prior to 1968, they used to be silver, and the weight is different. So let's look at what we did here. So I weighed the 1 franc from 64. As you can see, it weighs 5 grams, both sides. I took the price of silver yesterday. It was probably before they smashed it down, of course. It was at 25.02 in Swiss francs. So that's XAGCHF. That's the ticker in the FX market for silver. Yes, and they do trade that cross rate XAGCHF. I got information for the Swiss coins from silveragecoins.com. And you can find a wealth of information on that website of coins from all over the world. As you can see there, from 1875 to 1967, the 1 franc had 5 grams of weight. It had 0.835 content, silver content, so 83.5% silver. Circulating coins always are never like 100% or 999 silver, because they would wear out very quickly, so they have to add a stronger alloy. It's usually copper to make the coins sturdier, and so that they can circulate, because they are money and currency at the same time, of course. So you can do this for coins in your country as well. Go to silveragecoins.com, and if you have a silver coin from your country from many, many decades ago, and the current coins happen to be very similar, you can do this. Switzerland has kept the Swiss franc, the coin, so and they look very similar. So what we do to find out the price is we take the 5 grams and we'll multiply it by 0.835. We divide it by 31.1035, which is how many grams there are in a troy ounce, and we get the amount per troy ounces. So this 1 franc coin has 0.134229 troy ounces of silver. Multiply that by the troy ounce price in Swiss francs, 2502, and we get 335. And what's this got to do with Gresham's law? Well, I'll ask you a question. If you go to Switzerland, which probably is a bit difficult right now if you're going from the UK, but I think you can go from the US, because my niece and her husband and her kids are there right now. If they were to take one of these to Switzerland, 1964 1 franc, and then they went to the little corner shop in Switzerland, or little shop to to buy a sweet for the little girls, and they had a chewing gum for a franc, let's say, or something else, it wouldn't be wise to pay with this, because yes, the face value is a franc, but the coin is worth 335. So if you do know that all pre-1968 francs are made of silver, what do you do in that situation? Well, you go for the 1968 or the 2020 or whatever, and you pay with that, because you will see that that's not worth 335 in a minute. So there you go. So what that does is that puts the silver coins out of circulation. People stop using them, because people are not stupid. They realize that the face value is not really the true value of the coin, because yes, it's got silver in it. So you'd pay with this one, the copper nickel one, which right now is probably still worth less than the franc in terms of copper and nickel. I didn't work that one out, but it's probably going to get to a point where they might have to make new coins of new materials aside from copper nickel, and then we're really going down the road of perdition, the road of hyperinflation. So let's look at the 1968 Swiss franc. So one thing I noticed right away is that they actually lessened the weight of the coin. It's now 4.4 grams. So it's not even 5 grams anymore. And as you can see here from silveragecoins.com, they provide all the information for the post silver coins as well. As you can see here, from 1968 to 1981, and I think even after 81, I'm not sure why they don't have, it might have changed a little bit, but it's pretty much the same. It's copper nickel, so there's no silver. And that's Gresham's law. Really, instead of using the silver franc, 1 franc, you use the copper nickel. You could use that. It would be accepted, but it wouldn't be very clever to do that, because you could go and to a coin dealer and probably get about 3 francs for that. The coin dealer does need to make a living. He'll probably charge you, take some off for him or herself. So that's Gresham's law. And as I said, you could do this experiment for other countries, even though in Europe right now you use the euro, and the euro is a relatively new currency. I guess in Holland I have some silver guilders from the 60s. You might have some as well. And if you have a guilder from the 90s, or even before the euro came about, you could do the same experiment and you'll see. In the US, of course, you can do that with the quarters, half dollars. I don't know how. I don't think they're very prevalent these days. People don't use half dollars. So you could do the quarter, the dimes, and that's about it for the US. Nickels, of course, don't have any silver and didn't have silver before 1965. So what about hyperinflation? What does it have to do, in my opinion, with Gresham's law? Well, it comes to a point where even the bad money, people don't want the bad money anymore. So Gresham's law really breaks down, and all people want is anything except that fiat currency. So that's what I think will happen. Right now, of course, Gresham's law is still in effect. And I think when hyperinflation comes about and people lose total faith and confidence in the fiat currency, be it the dollar, the euro, the pound, the Aussie dollar, whatever currency, yes, the powers that be will try to bring in a digital version of the discredited currency. I don't think it will work. And eventually, though, the good money will come out, will have to come out. So it will be Gresham's law in reverse. The bad money has been so corrupted that the good money has to come back into circulation, or else we can't function as a society. I know many of you think that's what crypto will do, and I respect your opinion for that, and we'll have to see. I'm a free market guy. I personally think that looking back at history, silver has a very good chance of coming back from the dead, and so has gold, of course. Silver will be more as an everyday money and currency. Gold will be more for wealth preservation. So there you go. With that, let's quickly look at where the markets are this morning. So it's 8:22 a.m. London time. We've got spot gold at 1873, so that's up a couple of dollars. High has been 1875, low has been 1855, so we dropped even further overnight. There's little to say about what happened yesterday, except that it doesn't bother me. Do I really want to finance this system? I don't trust, and I haven't trusted governments, central banks for over a decade, almost 20 years. And with what's happening nowadays as well, since last year, and we're seeing that they're trying to keep us locked in here in the UK. I mean, people are so gullible. They're buying into all these stories. I mean, can you really trust these people? Would you really want to finance someone that's trying to oppress you and like trying to make your life miserable? I don't. So keep it coming. Keep the paper coming. Jeff Christian and his mates. I'll be stacking because you guys, your time is very near. Your time is almost up. These fiat currencies don't last forever. They usually go to zero. So yeah, if you can get a hold of physical gold and silver at the spot prices, I mean, I'll give you a medal. I'm sure you're going to be paying a lot of premium for it right now. So what I'm trying to say here if you can't trust the authorities that manage the system, the monetary system, the economic system, which basically they shouldn't really be running, they should leave it to the market. Why would you trust their own credit? Because that's what it is. The fiat currency that we use is state credit. And I think more and more people are starting to wake up to this, that you can't trust the people in power. We saw last weekend in London, was it last weekend? I think, yeah, demonstrations. I think it was on Saturday. There was hundreds of thousands of people in central London. They weren't protesting, they're just demonstrating for freedom. And the mainstream media reported that there were 100 or a couple hundred people out there. I mean, yeah, you can't even trust the people who are supposed to be the fourth estate, supposed to question the government and the state. You can't even trust them. So I think it's only a matter of time when people will realize that, and that's going to translate into hyperinflation, loss of confidence in the currency, loss of confidence in the people running the system. It's not about cost push inflation, hyperinflation. It's got nothing to do with that. It's got nothing to do with an economy doing well and overheating, as they call it. It's the loss of confidence. And that's why a lot of people are going to be caught unaware of that. They're still waiting for that money velocity statistic. So let's get back to the markets. Silver is at 27.40, basically unchanged. We almost got down to 27 yesterday, which is quite a big move. The Dow is unchanged, the Dow future. Nasdaq is down 3 points. S&P 500 future is up just under a point, so very quiet. The stock markets, I think there was a comment by the administration or Biden saying that going back on his intention to raise corporate taxes, I think that's why the stock market rallied a little bit yesterday. There's talk of tapering again from the Federal Reserve, which many of you know how I feel about it. Yes, they can try to do it, but they tried to do it in 1718, and you got the repo apocalypse. You got hedge funds failing left, right, and center, and the Fed having to reverse everything. So yeah, they can try it, but it will be a very dangerous experiment, I would say. It's inflate or die. So currencies right now, the pound's down slightly at 141. So yeah, the dollar did rally quite a bit yesterday, which was weird because that was the day that Russia announced that they're not even going to have dollar investments in their sovereign wealth funds. So I thought that was quite significant. And despite that, the dollar rallied quite strongly. I still think, of course, the dollar is in a bear market and has been since 2017. And I've talked about that in my dollar index videos. I made one recently, if you want to look at it. The euro is down 0.2% at 121.06. The dollar is down 0.1% versus the yen at 110.18. And yes, the dollar has rebounded since the Chinese raised their requirement ratio, reserve requirement ratio. We went from around the 635. We're now at 640. The dollar has rebounded. I still think the trend is lower in the dollar. It's going to turn around again lower versus the Chinese yuan. WTI crude is at 69.01, so up 0.5%. So getting close to $70. High-grade copper I saw got hit quite hard yesterday as well. We're 446 unchanged, but we're about 20 cents below the all-time high from 2011. Of course, earlier this year, we made an all-time high above 480. And to finish off, The 10-year note yield is at 162, so very steady, the 10-year yield. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.